Good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond, and let's begin with where we left off yesterday. With members, I discussed the week ahead commentary. It's posted here on the blog for members. If you haven't checked it out, please do so because it really puts forth our strategy for the new trading week, because it is going to be volatile, and the volatility has already begun. We'll get to the charts in a moment. For those who are not members and just feeling your way around here, getting to know me, please check out Best Stock Charts. I posted it on Saturday. It'll give you some commentary with regards to events that are influencing the market. And then I segue into how we performed last week in terms of our portfolio. And then what we do is we discuss the charts that I'm interested in this coming week. And you can always search by symbol right here. And before I leave to go to the charts, the website, folks, I know a lot of you are going to be jumping and clapping. We are building a new website. We are throwing this one away. We are rebuilding it from scratch. Yay! I'm talking with a couple of developers right now. We should come to an agreement sometime this week, and we will put the ball in motion to get a new website up. All good stuff. Lots of good things coming. So let's get to the events of the morning. Okay, let's begin with a shout out to our friends over in Texas, in particular Austin. We have a big following in Texas. I have been there many times. I love the state. I love the Mesquite Rodeo. I love the Riverwalk in San Antonio. And Dick's Last Resort. Always good. And unfortunately, overnight, what happened? A bombing in Austin. I haven't been there yet, but that's a hopping city. And many prayers to our friends over in Texas, and hopefully this SOB will be caught. 2 injured, thank God nobody killed. Many prayers, and while this certainly isn't a market mover, we do want to express our support for our friends in Texas. We stand with Texas. Let's move on to a potential market-moving headline that, if we had a free press in this country anymore, would certainly be getting a lot more press. And I think that at some point in time, the mainstream media is going to be shamed into covering a report, not a report, a story, a massive story of corruption that is unfolding before our eyes, and they refuse to cover it. CNN, MSNBC, NBC, CBS, ABC, they ignore it. New York Times. And this headline sums it up. There was a high-ranking plot to protect Hillary, Brennan, and they tried to frame the President of the United States. Now, I don't try to get political at all on this commentary, especially with members. But I'll tell you, if you stand in Trump's shoes right now, where they have an investigation on him for the past year and a half, with little or no evidence of corruption on his part, yet all the evidence in the world that Hillary and the FBI were colluding on so many levels, it's really sickening. And not even the FBI, the Department of Justice, and possibly even the President of the United States at the time, Barack Obama. And the media just simply ignores it, and they're trying to frame a sitting President of the United States. I'll tell you, I don't use this terminology frequently, but to me it seems like an internal soft coup, a coup d'etat. Call me an alarmist, call me what you will. I look at the facts, and the facts speak for themselves. Now, why is this a potential market mover? I'm not saying that he should do it, but were I in Trump's shoes and I had all this evidence mounting that was vindicating me, despite the fact I had this guy Mueller on my heels, I think that he may, in fact, be emboldened to fire this guy at some point in time. And you want to talk about a constitutional crisis? Even though it may be in his purview to do so, the wolves will be at his neck. Let's get to the charts. Keep an eye on this story, folks. Don't underestimate it. Okay, as is typical with stock charts today, what we're going to do is, after we talk about the headlines that can move the market, we segue into the pre-market activity, and then we segue into members' stock chart requests. That's where we review the symbols that our members submit for me to review on video. We review the charts. Let's kick things off with the Emini futures of the S&P 500. You can see that we put in a double top on a 4-hour chart. These will all be 4-hour charts. And we are now breaking down and putting in lower lows. Now remember, All last week when on Stock Charts Today, I warned, don't let these thugs take a parking space in your heads. What they're doing is they're spiking the futures market in an effort to get you to go buying stocks in the pre-market and at the open, and all they will do is sell into the pool of liquidity that you provide. What happened each and every day when the futures were bright green? The markets closed lower on the day, excluding Friday, but on Friday we closed well off the highs of the day. Every single one of those days when I warned, don't go chasing these markets, you will get burned, don't fall victim, it turned out that we were right. So what do you do on a day like this where you have the futures that are bright red? We're down over a half percentage point on the S&P 500. First, you should have known last Friday using my market wrap updates and the week ahead commentary that this was coming. This should be no surprise whatsoever. Last week's price action, all those morning gaps up higher and the fades implied that we were going to see lower lows fairly soon. That was bearish price action. And I warned members, be careful. And we took profits on our long positions. We actually took one loss as well last week, but net, it was a great week, and we raised cash. Like I always say, the markets send you signals, and the market continues to send us a signal this week vis-a-vis on this 4-hour chart, a double top, and we are now putting in lower lows and lower highs. Here's last Monday. They rallied it in the pre-market, sold it off. Tuesday, they rallied it in the morning, sold it off. So on and so forth. Don't fall victim. The NASDAQ futures, same deal here. The only difference is that rather than just being down a half percentage point, we are down 1.23% on the morning. We are putting in lower highs and lower lows. Would I go shorting into this weakness? No, of course not. We have the Federal Reserve meeting coming up tomorrow and Wednesday being the announcement, and we have a press conference after the announcement this month. So a lot of volatility will be out there this week. I would not get heavily positioned one way or the other in advance of the Fed meeting. That's my coaching to members. The US dollar. It was behaving well earlier. It is now rolled over, and we are beginning to weaken here a bit. Folks, I think, were I a betting man and I had a nickel to put down on the table, I would bet that I believe that in all probability, the Federal Reserve will be forced to change their tune this week, and we will see a weakening of the US dollar. Members, go check my commentary from yesterday. I go into great detail about why the Federal Reserve will be forced into toning down their hawkish tone. And what I didn't state on yesterday's video is I believe that if they do not tone down their tone of forward-looking moves and the roll-off of their balance sheet, this will be the last rate hike of the year, because these markets simply can't handle a three-handle. Think about it. We are buckling. The stock market is buckling, and we don't even have a three-handle on the 10-year yield. What will they do if they remain hawkish? Think about it. Yields will skyrocket, and the market will crumble. Gold. The VIX on gold right now, members, I'm going to post the link to the gold VIX. I don't talk about it frequently, but I think it's time. I'm going to post it in the forum. Take a look at it. If we close out the month where we're at right now on the gold VIX or lower, we will have an historic low on the gold VIX. We will never have seen a lower closing low on the VIX for gold. Now, the gold futures have been in a downtrend channel. We are beginning to break out above the upper band of resistance. I think that by the end of the week, gold will be up on the week. Members, more to come with regards to our strategy regarding gold, silver, and the US dollar. Let's get to members' stock chart request. And again, these are the symbols that our members submit for me to review, But our members are very smart, and many times they provide us trade ideas. So we may just get involved with some of these charts. We haven't yet decided. UGAZ, the first chart up. We want to start with the higher level view. Weekly chart UGAZ. I believe the last time I spoke about this, I mentioned that we were seeing ticky-tack trade, meaning we were getting a limp up higher in price, more aligned with being a short squeeze rather than institutional accumulation like you saw here, long white candlesticks. You didn't get that this time. A lot of hollow filled candlesticks. Last week, a down week as we hit the upper band of resistance. Us being so close to the upper band of resistance, I can't say to buy UGAZ until we break out and close above the upper band of resistance. It would simply be irresponsible for me to do so. I think we're going to roll over on Stokes, watch out for a higher low, a double bottom setup. Then we'll look to enter the position. We'll revisit it. Daily chart UGAZ. Do we have a short-term swing trade higher here? Maybe. We have a W formation, which is forming. We're forming the right side of the W. On Friday, we had an inside day, meaning no new high, no new low. The question then becomes, do we have a new higher low forming here? But for that to even matter, we need to see a higher high above 64.41. Now, if you're planning on swing trading this very short term, use a 2-hour chart, take your crayon out, throw some lines up here. If you wanted to buy a position today, sure, fine, go for it. I would keep it really small. I mean, I don't see the value of trying to trade these shares. You're going to have a lot of resistance above. The long-term downtrend is certainly intact. The probability of us rolling over here is far too high. You're putting on way too much risk for too little reward. If you're looking to get long of the shares for a longer term trade, I would wait for that weekly breakout. If you're looking to swing trade this short term for a 2-point pop, fine. If you get a pullback and a retest of this lower band of support in dotted blue or the 55.91 level, fine. Open up a position with a stop loss right below 55.91. I would look to book profits quickly up at $60 to $62 per share and get out. If we manage to rally up and through 64.41, perhaps you want to re-enter and enjoy the ride up to $70 per share, where you're going to have a ton of sellers. Next chart up for Chris, PPL. We went over PPL for Chris a couple of weeks ago. I remember I liked the daily chart somewhat. It was consolidating nicely. The weekly chart, we've seen 2 sequential weeks of upward move after a dramatic sell-off. Folks, a sell-off like this does not end without having a retest of support. So to me, that's going to be a foregone conclusion that we're going to get that. Now, we do have a double bottom setup formed on the stochastics. We've rallied. We're pulling back. It appears as though we want to hook back up here. Higher lows in RSI. Volume is very good. It looks like we're topping out here on ADX red. Long in the tooth on MACD. Very mature. Now, while I've made some bullish observations here, you can't buy it. The reason is that if you take a look at the highs of last week and where we closed, take a look back at where you would be buying if you opened up your position where we closed on Friday, right at historical resistance. Buyers back here are going to act as overhead supply. What would I do? How would I trade this position? Wait for a pullback and a retest at 27.07. Open up your position with a stop right below. Add to your position on a rally up and through this upper band of resistance in blue, daily chart. Now, on a daily basis, RSI, we've broken out of. But again, on price, you're still seeing topping tails here. This implies that you have profit takers who bought here. They're booking profits. Plus, you have buyers who bought back here, now looking to sell because what was a profitable trade became a loss. Now they are seeing it turn profitable once again. They're just booking profits. They're disappointed with the price action. It's all psychology, and you can't blame them. So to profit from this trade, you need a pullback and retest of support. It's going to happen. As sure as God made green little apples, absent some huge headline news. It'll happen. Allow the stock to come to you. Once you get your pullback and a retest, put that stop loss order in. Once we rally up and through these upper bands of resistance, add more on strength. Chris, if I didn't answer your question clearly, and that goes for any member, leave a comment in the forum and I will clarify. FFTY, I love this ETF. This is an IBD 50 fund. I'm a huge IBD fan, Investors Business Daily. You can't buy this ETF though, because what I'm seeing here is a rally back and in all probability a lower high. And I think that we are rolling over if the Federal Reserve does not forecast that they are aware that the yield curve is dropping like a rock, meaning the spread between the 2-year and 10-year yield is rapidly declining and may soon invert. And the yield curve has forecast the last 6 recessions. And for those of you out there that are new to trading and have a lot of confidence in our Federal Reserve because they're the smartest guys in the room, don't. These are the same guys who started this boom-bust economy under Alan Greenspan and who have missed every single recession since the mid-1990s. Don't give them too much credit. So I'm looking at a possible double top here. Volume last week was very high. Lower highs and ultimate oscillator. Daily chart. I think that if the Federal Reserve revises its statement this week and becomes less hawkish, more dovish, and announces that it is keenly aware of the weakening of the economy, that you may just see this support level here hold at 34.50. If they do not, I think that the price action that you saw last week on the FFTY and the price action that you're seeing this morning is a drop in the bucket compared to what we're going to see if the markets believe that the Federal Reserve yet again just doesn't get it. So when would I buy? I would buy after the Federal Reserve announcement and on a breakout above the upper band of resistance at 35.20. I would add more aggressively on a rally and a close above 36.18. Stokes are looking good. They appear to want to hook back up, but there's no assurance of that. Price and volume trump all. So watch the price and volume action. Our last chart up is going to be CNCR weekly chart. We flashed a bearish key reversal last week. I wouldn't be a buyer of these shares until we pulled back and retested the lower band of support if we see a new weekly low. And in all probability, we will, given this price action. We do have support below at 29.18. That looks like a really attractive support level. Volume last week was very high. So don't ignore the price and volume action. The market is sending you a signal. Daily chart. On a daily basis, we broke down below a support level. Now, we did so on very light volume, so I wouldn't be a bit surprised to see a bounce back here. But if you decide to buy these shares because they managed to recapture this support level, that's fine. Just use a stop right below last week's lows or this week's lows if we undercut last week's lows. Because what you need to keep in mind is not the daily chart, but the higher level view, which is the weekly chart. And given the price action this morning on the S&P 500 and the NASDAQ, this stock is going to have a hard time of being able to not trade with the rest of the market and avoid following through on the bearish price action we saw last week to the downside. So consider all stocks as speculative. Consider all stocks as job candidates, and you are the interviewer. Set the criteria for each interviewee to pass before they get rewarded with the job to make you money. And what is that job? What must it do? Well, in this case here, it either has to pull back, which is fine. It doesn't mean it gets excluded from your criteria, but it must hold support. And after it holds support and is worthy of you, like back here, during the week of February the 26th, it flashed a bullish key reversal. It just got hired because it passed the interview process. When does it get a promotion? When it rallies up and through resistance. What's the promotion? You add more to your portfolio. And that's it for this morning, folks. Remember, please, don't let these thugs on the financial news media take up parking space in your head. The futures are down this morning. It doesn't mean that they will stay down. But I'll tell you, given the price action from last week, I'm not the least bit surprised that they are down. So if you decide to get long of this market, stay small and keep your stops tight. And all eyes are on the Federal Reserve on Wednesday. Have no doubt about it. This is a critical meeting. So if you want updates and future commentaries, please follow me on YouTube. If you're watching me there, click that bell. If you're watching me on the website, enter your email address. We hate spam too. You'll not be spammed, and you get a few trade tutorials. If you found me through StockTwits, Twitter, Seeking Alpha, Scutify, follow me there. Everybody have a profitable trading week. And again, many prayers to our friends over in Texas. Be well.